They believe electric cars will make up about 32% of total new car sales. Tesla's statistics certainly back these numbers up. In the third quarter of 2021, Tesla generated revenue of $13.8 billion, up 57% year over year, with a 70% increase in gross profit to $3.7 billion. It also announced a $3.2 billion increase in adjusted earnings before interest, taxes, depreciation, and amortization. Period, up 77% year over year. The company announced that the third quarter of 2021 will be a record time in many ways. He added in the report accompanying the results that we achieved the best net income, operating profits, and gross profit ever. We also achieved an operating margin of 14.6%, which exceeds our medium-term low operating margin expectations. Tesla also stated that the level of profitability was achieved despite a 6% year-on-year decline in the average selling price in the third quarter as a result of the shift to lower-priced vehicles. Tesla added that demand for electric cars is still going through a structural transition. We believe that the more Teslas are on the road, the more Tesla owners will educate others about the benefits of electric vehicles. Tesla also echoed the experiences of other automakers when it comes to industry-wide issues and highlighted how these issues are being addressed. We believe the company has a relatively strong handle on this statistical data. The forecast is also consistent with our beliefs about Tesla's expected future price. However, it's important to keep in mind that analyst forecasts and Tesla stock price targets are subject to change. The algorithmic prediction of portfolio investors is very optimistic about the company's prospects. The stock is a very good long-term investment, according to the report, and the price could rise to $1,340 next year and $2,999 a share in 5 years, according to the company's 5-year forecast. Some experts are not enthusiastic about the company's prospects. Danny Hewson, financial analyst at AG Bell, is pessimistic about the company's long-term share price potential. Only an eternal optimist would expect Tesla shares to continue rising the way they have been, she said in an interview. She continued by saying that Tesla will have a lot of opportunities in the next 5 years, but there will also be a lot of competition. Tesla has an advantage because it was first out of the gate, but Hewson warns that once the field expands and consumers have more choices, Tesla will have to work harder. However, Tesla bulls have good reasons to believe that given enough time, the stock will continue to rise when it comes to the state of the auto sector. Jefferies analyst Philip Houchwise also believes that Tesla operates at a higher level than its competitors and will continue to do so. When asked for comment, Hordwas said that while we were lowering expectations across OEM coverage, we were raising them at Tesla due to price increases outweighing volume and battery cost inflation risks. We look forward to Elon Musk delivering the third part of the master plan while accumulating cash at a faster rate than Tesla can physically develop. However, there are still risks to take into account, namely supply chain issues and especially the global chip shortage. We expect that recent price increases, as well as other positive events, have offset these concerns. Production is already underway at the Austin plant, while the Berlin plant started on March 22, and the Shanghai facility is on track to increase its capacity to 1 million units. In addition to these bullish catalysts, the main reason we're particularly optimistic about this company's future is that instead of focusing solely on cost, Tesla has also made an effort to improve the quality of its cars. We firmly believe that the main reason Tesla has come this far is due to its innovative nature, and as it stands, it has barely scratched the surface of its grand plans with so much more up its sleeve. Tesla is sure to revolutionize the technology and automotive industry. This will definitely reflect in the value of the stock because it is a high-growth stock after all. However, remember the statistics we mentioned earlier about people who invested in Tesla a few years ago. If you own 10 stocks today, just think about how important they will be in the future. How many Tesla shares do you own? Will you invest more? Comment below. Owning 10 shares of Tesla may actually be a lot more than you think. There's no doubt that the stock has had a tough year. However, the market now seems to be enamored with high-tech stocks in general and electric vehicles, especially with Tesla taking the lead and prices returning to their previous highs. This begs the question, what is the future of the stock and how does this apply to investors? In this video, we'll take a look at Tesla's track record, its key drivers, and analyst forecasts. Why do we think Tesla's future price will make you rich? Keep watching to find out. Tesla's status as a law unto itself is well known. As the company continues to make ripples in the stock market, many have been thinking about the past returns made by early investors and the potential future gains as the company continues to climb. According to analysts, you could have nearly tripled your money if you had invested in Tesla in November 2020, when the stock was valued at just over $400 per share. According to CNBC's calculations, a $1,000 investment on November 2, 2020 would have been worth about $2,940, or a 193% return in just the following year. The returns are much higher if you go back a few years. Tesla was selling for approximately $38 per share 6 years ago on November 2, 2016. Likewise, a $1,000 investment would have appreciated approximately 3,025% and be worth approximately $31,286. The S&P 500 would have returned just 142.4% over the same time period. You could have made more money if you had invested in Tesla in 2011, which was then selling for just $5. The company's growth speaks for itself, too. Tesla went from selling only the Roadster to offering Models S, 3, X, and Y during those 11 years, and eventually became profitable. It's true that regardless of the massive increase in Tesla stock, any single stock can outperform or underperform the past and is no guarantee of future results. However, the pattern here is quite clear. Owning 10 shares of Tesla is a lot more than you think, because Tesla is a growth stock. The ratios continue to rise to shocking levels and future returns could be huge. However, it is high risk, so you need to make sure that this is the price you are willing to pay. It's been an unstable year, and many investors have lost confidence over the past few months. This led to a massive sell-off, sending the stock price down even further. More loyal investors have finally been rewarded for their patience. Tesla stockholders have seen a return to more familiar territory, with the stock price rising more than 30% in just over a week to around $1,000. That took it back to levels last seen in January, and it rebounded strongly from its $700 low in 2020 into the shadow created by events in Ukraine. It is certain that the imposition of sanctions on Russia contributed to the market decline. Sentiment has also shifted away from high-tech stocks in general and the electric vehicle industry in particular. During the sale process, the company pushed to further tremendous milestones. Ultimately, Tesla's stock price was boosted by the completion of its $5.5 billion production plant in Germany and the delivery of the first Model Y. The plant is seen as critical to Tesla's European ambitions and ultimately the company's expansion. So, what does the future hold for Tesla, and why do we think Tesla's expected future price will make you rich? First, we need to look at the key drivers for Tesla stock. The fact that Tesla is constantly innovating and is led by maverick entrepreneur Elon Musk is the most obvious element fueling Tesla stock prices. There is also no doubt that over the next few decades, the world will accept electric cars as the norm. As Tesla advances, it will reap huge rewards, and so will its investors. As the world catches up, its value will increase and existing investors will increase their initial investments by amazing proportions. Analysts seem to agree with us on this matter. Deloitte researchers stated that their global forecast for electric vehicles is 29% CAGR achieved over 10 years. According to researchers, total electric vehicle sales are expected to rise from 2.5 million in 2020 to 11.2 million in 2025, and then to 31.1 million by 2030.